Hi students, how are you all? Hope you all are doing fine and safe at your places. So today we will be starting off with the illustrations on the topic joint venture accounting. So we completed with the conceptual part of the joint venture accounting, and today we will be solving questions related to that, and we will be looking at how the accounts are maintained when there are separate books of accounts prepared on joint venture, and how the accounts, or how in the main books of accounts the accounting for joint venture is done. So starting with the very first question of joint venture accounting. So Prabir and Mihir, doing business separately as building contractors, undertake jointly to build a skyscraper for a newly started public limited company for a contract price of 1 crore. So we learned while we were while we were studying about joint venture accounting, that such joint ventures are entered into for a limited period of time, and also for a particular business activity, and in order to complete a particular project. So here, as we see that both Prabir and Mihir are building contractors, and they jointly undertake a project which is to build a skyscraper for a newly started public limited company, and the contract price of their project is rupees 1 crore, and which is payable as 80 lakhs in cash, and the balance by way of fully paid equity shares of the new company. So 80 lakhs out of this 1 lakh, 80 lakhs would be paid in cash, and the remaining remittance would be by way of, or the 20 lakh would be by way of fully paid equity shares of the new company for which they are constructing the skyscraper, right? And then a bank account was opened for this purpose, in which Prabir had paid rupees 25 lakh and Mihir paid rupees 15 lakh. So this is the initial contribution of the venturers, right? So you can treat this as, or listed down here as, initial contribution of the co-venturers, right? And as it said here that this is a separate bank account, so they opened a separate bank account for their particular new venture, that the joint venture that they both had entered into, and the profit sharing ratio had been agreed as between Prabir and Mihir as 2:1, right? And the transactions that were entered, or that happened after entering into a joint venture, was that advance had received. So from this 1 crore, 50 lakh they had paid advance. Then they paid wages to the contractors worth rupees 10 lakhs. They bought materials in order to build this skyscraper worth rupees 60 lakh, and material out of along with this, because these Prabir and Mihir, both the co-venturers, were single-handedly also having their contracts in order to build or construct such things. So they also supplied material from their own business worth rupees 10 lakh. From their personal businesses, they had supplied material worth rupees 10 lakh. Prabir supplied, and Mihir supplied material worth rupees 15 lakh. Then along with the wages, they also paid architect's fee from the joint bank account, which is rupees 21 lakh, and this is architect's fees. Then the contract was completed and the price was duly paid. So 50 lakh had been already paid, and after completion of the contract, the price had been paid, that is 80 lakh was paid in cash and the other by way of shares. And then because the contract was completed, so joint venture was duly closed by Prabir by taking all the shares at rupees 18 lakh, and Mihir taking over the balance material for rupees 3 lakh. So prepare the joint venture accounting, joint venture account, joint bank account, and co-venturers account, as well as the shares account. So the contract was completed and the price was duly paid. Now we have to prepare the joint venture account, the joint bank account, co-venturers account, and the shares account in this particular question. So that means separate books of accounts have been prepared, have been maintained, separate books of accounts maintained for this particular joint venture, as only then in that case only these three accounts have been maintained, and along with that the shares account, as the 20% of the amount had been paid by way of fully paid equity shares of the new company. After that the account was duly closed also, and Prabir took the shares worth the 20 lakh shares at rupees 18 lakh, and then Mihir also took over the balance material which was worth rupees 3 lakh. So all these accounting transactions we have to show via these by preparing these three accounts in the books of the co-venturers. So starting off with the solution. So here, solution to illustration 1. Right. So firstly, we will be preparing the joint venture account. Right. Here we'll have the debit and the credit. So now, starting with the very first entry, particulars amount. Yeah, so since firstly we would be accounting for the advance that has been received by the co-venturers on this very first assignment. So advance was received from the company for rupees 50 lakhs. So, and this must have been paid through the bank account, or we will also be recording it in the bank account. And here we can write down as by advance received worth rupees 50 lakh, right? And then the next was that there had been wages that is paid. So we would be, so here also, because it would be through the bank, so by joint bank account, advance received from the company 50 lakh. Here also two joint bank account, as the wages are being paid, and such wages would be paid through the bank account only. So two joint bank account, wages paid, and they are worth rupees 10 lakhs. Okay. Then we have the next was that material had been bought. So again, these are the purchases. So we would be accounting that in the joint venture account through the joint bank, because the purchase must have been done through the bank or cash proceeds. So to joint bank account, bought materials or material bought, or we can simply write down material here, which is understood. So it was worth rupees 60 lakhs. Right, and the next is that along with that, the material was also supplied by the co-venturers. So material supplied by Prabir. So because it is supplied by them, so it must be. So the co-venturers account would be thus credited. So to Prabir's account. Here we can put down it as material supplied, which is worth rupees 10 lakh. From Prabir, it is worth rupees 10 lakh, and from Mihir, it is worth rupees 15 lakh. So 10 lakh, then 15 lakh, and here we can write down to Mihir's account, material supplied. again. So after this, there was an architect's fees which was paid from the joint bank account. So again, to joint bank account. Architect fees which is worth rupees 21 lakhs. So we've accounted for all the expenses and the transactions that were done by the co-venturers or through the joint bank account. So here we've received the advance, and then also, as it is said that there was a contribution, so this contribution would be accounted for in the joint bank account. This is nothing to, the initial contribution of the co-venturers would be accounted for in the joint bank account. Nothing would from there, nothing would come in the joint venture account. So here in the joint venture account, we would be mainly taking care of the expenses, any income part like sales have been done or the advance has been received. So now in this case, in this particular case, the contract is to build the skyscraper for the new company which is being formed. So in that case, we received the 50 lakh advance. And then after that, it was it said that the contract was completed and the price was duly paid. So assuming the contract is now completed, as we have not been given the dates, so after completion of the contract, since the amount was duly paid, so we have 80 lakhs because 20 lakhs have been paid through the by way of transferring new equity shares, which of the same company for which they are building the skyscraper. So here again by joint bank account, we can write on completion of project, remaining proceeds received worth rupees 30 lakh and out. So this amounts to 80 lakh. So don't think that, I mean, this zero got merged with the other zero. So this is 30 lakh only, or maybe I can just correct it and write it down here, erase and write again in order to avoid any confusion. So this is 30 lakh. So here we will be writing off 30 lakh. Clear? Now after this 30 lakh, we had received shares. So by shares account, new shares being received worth rupees 20 lakhs. Okay. And now after the joint venture or after the work of the joint venture or after the project has completed, then the joint venture was duly closed by Prabir taking the shares. So now Prabir has taken the shares. So, and those shares were taken worth rupees 18 lakhs. So basically we will here be in the joint venture, we will not be accounting for the proceeds worth rupees 18 lakh. That would be, that adjustment will take place in the co-venturers account. But here we will be accounting for the loss as the price of the shares. So we'll probably prepare it as a working note. So here we will write down working note, and the share proceeds were worth rupees 20 lakhs. However, the co-venturer, that is Prabir, took the shares. Prabir took shares at rupees 18 lakh. So amounting to rupees 2 lakh loss. So for this, this loss we will be accounting for in the joint venture account, and that is what we would be here we will account for in the joint venture account, and listing it down here as to shares account. loss worth rupees 2 lakh. Right, so the proceeds would be there, would be transferred in the account of the joint venturer. Here we will account for the loss because the value of the shares was worth rupees 2 lakh, and here it was taken over by one of the co-venturers at rupees 18 lakh. Again, the other co-venturer, the balance material for rupees 3 lakh was transferred. The balance material for rupees 3 lakh. So Mihir took over the balance material. So here we would be transferring such stock to the co-venturer Mihir's account. So by Mihir's account, stock taken worth rupees 3 lakhs. So these are the transactions which have to be recorded in the joint venture account. So we recorded for the advances, we recorded for the remaining proceeds, then we recorded the shares, then we recorded the stock that has been taken over, wages, then material supplied by the co-venturers, the architect's fees, and the loss which has been incurred due to the sale proceeds of the shares that have been transferred to the co-venturer Prabir. So now let us see that whether on this particular joint venture the co-venturers have earned profit or loss. So here if you see the credit side, it's 50 lakh, 80 lakh basically, plus 20 lakh, so it amounts to 1 crore 3 lakh, right? And here if we see in the debit side, so we have 10 lakhs plus 60 lakh plus 10 lakhs, so 80 lakhs plus 15 lakhs plus 21 lakh plus 2 lakh, which amounts to 1 crore 18 lakhs, right? 1 crore 18 lakh. Now, and we had the total here less than 1 crore 18 lakh. So basically on this particular joint venture, Prabir and Mihir have had to incur loss, and such loss is equal to 1 crore 18 lakh minus 3 lakh minus 20 lakh minus 30 lakh and minus 80 lakhs, which amounts to 15 lakh being the loss, and the profit sharing ratio as given in the question. So we'll note it down here only. The profit sharing ratio is 2:1. So this 15 lakh we will be transferring by loss, or we would be transferring this in the account of the co-venturer, so by Prabir and Mihir, and then write down the description of this particular transaction. So by Prabir account and by Mihir's account. So here 15 lakh 2:1 is the ratio. So 15 lakh divided by 3 into 2 amounts to 10 lakhs. And the remaining would be transferred to Mihir, which is 5 lakh, and this 5 lakh will also amount for the 1/3 part of the profit sharing ratio. So now this also the total amounts to 1 crore 18 lakhs. Alright, so on similar lines, and looking at the transactions of through joint bank, we have this transaction, this particular transaction, not this one, and neither of these ones. So we would be recording the above 3 transactions in the joint bank account. Along with this is the joint bank account for wages, and then the material that has been purchased, since this is purchased or bought from directly from the co-venturer, so this will not account for in this particular transaction will not be accounted for in the joint bank account. And here again we have the joint bank account which has the architect fees, so this will also be included in the joint bank account. Then we have the losses, so we will be preparing separately the shares account after we finish off with the other important bank accounts, other important joint venture accounts. So now moving to the next account, which is joint bank account. So here, now preparing the joint bank account, debit and credit. So here it is particulars, amount, particulars and amount. Amount, particulars, amount. Okay. So the first is the advance that was received, and that we would be accounting for here. So to joint venture account. Before recording for the advances, the first and foremost transaction in the joint bank account would be the contribution that is received from the co-venturer. So firstly, we have to Prabir's account and to Mihir's account. So the contribution received from Prabir is worth 25 lakh, and from Mihir it is 15 lakhs. Now we will be writing down the advance. So to joint venture account, advance 50 lakh. Right, and after that we have the wages that have been paid. So by joint venture account, wages. Then we have by joint venture account the material procured, right? Material is worth rupees 60 lakh. Then the wages were rupees 10 lakhs. And then we have the architect's fees also. Architect's fees. So by joint venture account, architect, and architect's fees was 21 lakhs. All right. And on completion of the tenure, again, we received the remaining amount. So the remaining amount, so then to joint venture account, since the 20 lakhs were by a way of shares, as the shares were received, so that will not be accounted for in the joint bank account. Here we will only be accounting for the 80 lakh cash that was received by the co-venturers through joint bank account. So to joint venture account, balance amount received, this amounting to which is what, 30 lakhs, right? So 80 minus 50 amounting to the remaining 30 lakhs. So now what are we left with? So we will be, so in the joint bank account, so we will be closing that. But before closing this account, let us take a look at what is the, so we did not put anything else here, as we have accounted for the amount 80 lakh that has been received. Then we have recorded the advance that has been received and the remaining balance also. Then we have given effect to the wages and materials being bought, and also paid the architect's fees. And before finding out these balances, we will have to first draft the accounts of the co-venturers, and from that only we will be able to determine the balances which we will be bringing here in the joint bank account, and thus closing the joint bank account after closure of the joint venture. So now drafting Prabir's account first. And here we have debit and credit, date, particulars, or rather we only have the particulars and the amount. Then also we have here particulars and the amount. Okay. So the first transaction again would be the contribution that has been made by Prabir, which will be by joint bank account amounting to 25 lakhs. Right, and then we will also be transferring the material that has been supplied by Prabir, and that material amounted to rupees 10 lakh. So by joint venture account, material supplied, and that amounted to worth rupees 10 lakh. Also, Prabir took away the shares that have been provided by the company, and new equity shares were taken over by Prabir. So two shares account and 18 lakhs. So we have loss worth rupees 2 lakhs. And also we have the losses that were determined in the joint venture account, and for Prabir it was 10 lakh. So in the case, so here also two joint venture account, which would be the loss transferred, and this loss amounted to 10 lakhs. That's it. So here then we would be determining this is clearly a greater side, that is 35 lakhs, and here we have 28 lakhs. So to balance paid, and that would be through joint bank account, or you can write two joint bank account. I'm putting it down here, two joint bank account. Balance paid, which was worth rupees 7 lakh. And on the same line, we will be quickly drawing Mihir's account, wherein debit, credit, and then particulars. So yeah, here also again we have, in case here, particulars and amount. So here also by joint bank account, by joint bank account, and by joint bank we have 25 lakhs was from Prabir and 15 lakh was from Mihir. After that again through the joint venture by JV, material supplied. Alright, so material supplied worth rupees again 15 lakhs. Okay, And then we had bank account, we've taken material supply. So here we will be accounting for the, so there were no purchases or the shares that were taken by Mihir. However, we had, just a second, I'll write down here first, particulars and the amount. Sorry, the line is correct. Yeah, here we will note down particulars. So as I was saying, that Mihir did not take over any shares. However, the stock was taken over by Mihir. So to joint venture account. So we would not be recording here any sale proceeds because there weren't any in case of Mihir. The only thing that has been taken over by Mihir, apart from the other joint proceeds that have been done or initial contributions that have been done. So to joint venture account, stock taken worth rupees 3 lakh. And then the loss that we had accounted for in the joint venture account, losses worth rupees 5 lakh. Now the remaining would be the balance that will be transferred to the joint bank account. So this is 30 lakh. Yeah, so 30 minus 8 lakh. So by to balance paid, in fact, we would be again here, we will be writing to joint bank account. We would be transferring this to the joint bank account as the balance becomes payable. So to joint bank account, balance paid 22 lakh. So this becomes the total here as 30 lakhs. And here also the credit side, it is 30 lakhs. So this closes the accounts of the co-venturer. Now moving up to the closing balance, here the balances that have been paid are 7 lakh and 22 lakh, and this would thus bring the total to, should bring the total to 1 crore 20 lakhs. And let us calculate 10 lakhs. Then we have 60 lakh. Then we have 21 lakh, 7 lakh and 22 lakh, which amounts to 1 crore 20 lakh. So this is how you have to prepare the accounts, and at the end and after recording all the transactions and all the sale proceeds or the initial contributions from the venturer or any other transactions that have been, some goods have been taken over or the stock has been taken over or the sale proceeds have been transferred to the co-venturer's account. After accounting for all such transactions, ultimately the check is that your joint bank account should tally, and thus the accounts would be closed. And here the only account that we are left with to prepare is the shares account. So that also we will let us prepare. So we have to write down particulars, amount, then particular. So this is relatively a simple account, as we have to only record the transaction when the shares were transferred to the co-venturer's account, and after that when the shares were transferred in the joint venture in the books of accounts, and recording such share proceeds worth rupees 20 lakh. So from here we would be to joint venture account, and the proceeds were worth rupees. So to new equity shares worth rupees 20 lakh were transferred in the joint ventures account, and from this such shares were transferred or taken over by Prabir. So by Prabir's account, and such shares were taken over at the same shares, that is the shares costing rupees 20 lakh were taken over by Prabir at 18 lakh, so which led to loss on such sale of shares or transfer of such shares to the co-venturer's account. So by joint venture, recording of such loss of share in joint venture account only. So loss on transfer of shares amounting to 2 lakh. This is 20 lakh and again 20 lakh. All right. So this finishes the first question. So the question was relatively much simple, and there we only had to put down the entries and analyze and recognize that in which accounts we have to account for such transactions. So moving on to the next question. Now starting with the second illustration, which says that P and Q entered into a joint venture for underwriting the subscription at par of 25,000 shares of rupees 10 each of a joint stock company. So they entered into the joint venture in order to underwrite the subscription, and further they agreed to share the profits or losses in the ratio of 3:2, that is 3 by 5 and 2 by 5, which means the profit share ratio was 3:2, and the consideration for guaranteeing this subscription was that the 250 other shares of rupees 10 each were fully paid. So in response to their this project that P and Q have taken up for underwriting the subscription, in consideration they will be getting subscription for guaranteeing this particular subscription, they will be getting 250 other shares of rupees 10 each fully paid will be issued to P and Q. And now out of this 25,000, the public took 24,000 of the shares, and the remaining shares of the guaranteed issue were taken up by P and Q, who will provide the cash equally. The entire shareholding of the venture was then sold through other brokers, 60% at a price of rupees 9.5 less brokerage 50 paisa, 20% at a price of rupees 9.75 brokerage 50 paisa, and the balance were taken over by P and Q equally at rupees 9 per share. So we have to prepare the joint venture account, the joint bank account, and the capital accounts of P and Q. So basically, to sum it up, 25 out of the 25,000 shares which were agreed upon by P and Q that they will be underwriting their subscription at par, 24,000 was was taken up by the public, and 1,000, the remaining shares, were issued and were taken up by P and Q, that is also equally, that is 500 each. And after that, the entire shareholding was then sold through other brokers. And how was this done? So 60% at a price of 60% of shareholding was at a price of 9.50 less 50 paisa, which amounts to rupees 9. 20% at a price of 20% of shareholding, and 9.75 minus 50 paisa, that amounts to 9.25, and the balance was taken over, that is 60/80. The balance 20% was taken over by P and Q. So P 10%, Q 10%, and that was also taken up by them at rupees. So both the cost amounting to rupees 9 per share. All right, and now we have to draw the joint venture account, the joint bank account, capital accounts of P and Q. That means this again is the question regarding the case where separate books of accounts have been maintained for a particular joint venture. Okay, so starting with the solution of the particular question. Now starting with the solution to illustration 2. And we would be first drafting the joint venture account. So here we will have debit, then the credit, date, or we can simply here mention the particulars and the amount. Then again the particulars for the credit side and its amount. So the first and foremost thing, as in the question we have studied, that 25,000 shares of rupees 10 each were taken for underwriting the subscription. Out of that, 24,000 have been taken over by public, and 1,000 shares were taken up by P and Q. So we would be recording the cost of such shares initially in the joint venture account, and that would be through the joint bank. So to joint bank account, cost, and the number of shares were cost of 1,000 shares at rupees 10 each. Cost of 1,000 shares at rupees 10 each. So that would amount to 10,000, right? And then this particular so out of those 24,000, so out of these shares, then it has been given that the public took up 24,000 of the shares, and the remaining shares of the guaranteed issue, that is 1,000 shares which were procured at rupees 10 each. So out of this guaranteed issue that was taken up by P and Q, the entire shareholding was further sold through other brokers. So this particular shareholding was further sold, and out of this shareholding, that is out of this 10,000, 60% have been sold, and that is what we have recorded here, that this particular details, that 60% of the shareholding has been sold at rupees 9, 20% at rupees 9.25, and further the remaining 20% was distributed equally and taken up by P and Q. So let us find out the sale proceeds, which of these particular, of these costed, of these 10,000 shares, the shares worth rupees 10,000, and let us find out the sale value and the sale proceeds. So basically the share purchased, working note 1, and this we are evaluating the value for the sale proceeds of the shares that have been further sold through the brokers. So shares purchased by P and Q were worth rupees 1,000 shares. So these were 1,000 shares. And then also it is mentioned in the question that the consideration for for underwriting this particular subscription was that P and Q will get 250 other shares 250 other shares of rupees 10 each, which would be fully paid to and issued to them. So here also we would be adding that 250 shares also. So the total shares that P and Q as a joint venture had was 1250 shares, and this was further sold through brokers. And now out of this 1250, 60%, 20%, and then further 20% distributed between P and Q equally. Right, so 60% of 1250 amounts to 750 shares. And we evaluated that at rupees 750 shares were procured at rupees 9.5 less 50 paisa brokerage, so at rupees 9, which will amount to 750 into 9 gives us 6750. Then we have 20% shares, that is 1250 into 20% would amount to 250 shares at rupees 9.25, as 9.75 less 50 paisa will amount to 9.25 only. So 250 to 9.25 gives us 2312.50. Alright, now this amounts to the total of the sale proceeds that have been sale proceeds of the shares that have been sold to the outside people through the brokers, and then this 20%, which again amounts to 250 and was procured by P and Q at rupees 9. So 250 into 9 will amount to 2250, which will further be segregated equally, and thus P 2250 divided by 2 will amount to 1125 each. So they will be keeping the shares worth rupees 1125 with them. Alright, now we will be putting this down in the joint venture account, this calculation. So here we will mention, so by joint bank account, and the sale proceeds of shares, that is 60% and the 20%, would amount to 6750 plus 2312.5, that gives us 9062.5. So we will round it up and write down here 9063. And further, the accounts that were the shares that were taken up by P and Q would be thus transferred to P and Q's capital account, or we can also simply write down by P's account, by Q's account, mentioning, and we evaluated 2250 divided by 2, 1125 each. All right. So now this is how we will record it in the joint venture account, and then further, now these are the transactions that we are supposed to do and adjustments in the joint venture account. So now we will be evaluating profit or loss. So as we can see here, it is 10,000 and here it is 9063 plus 1125 plus 1125, that amounts to 11313, and this gives us profit 1313, and which will be divided in the agreed ratio, which is 3:2. So 2 P's account, 2 Q's account, and we will be segregating this. So 3:2 is their profit sharing ratio. So first let us determine the profit for P, which amounts to 1313 divided by 5 into 3 gives us 788. And for Q, it would be 525, which gives us a total as 11,313. Right, so now we would be preparing the joint bank account and then the capital account or the co-venturers accounts. So joint bank account, particulars. So now, since it is mentioned in the question that you need to draw the capital accounts of P and Q, so you can address likewise in the question, like in the joint venture account, instead of writing P's account, you can simply write down by P's capital account. So since it is, so we are not addressing P and Q here as co-venturers, or although the relationship between them is of a co-venturer only. However, since it has been specifically mentioned to write to draft their capital accounts, so you can choose to. So as I mean to say that since it is mentioned, then we can stick to the capital account of P and Q. Otherwise, the relationship between P and Q is of a co-venturer, and if you only write P account or Q account, that will also do. As in, there is nothing wrong in addressing them as P's account and Q's account, right? Particulars, amount. Right, so firstly, here we would be transferring or mentioning by joint venture account cost of the shares that have been taken up by P and Q by joint venture account, that is 10,000, right? 1,000 shares at rupees 10. Then we can simply put down here, as since these were taken up equally by P and Q, so here 2P's capital account, 2Q's capital account, thus taking over the shares equally, which would be 5,000 and 5,000. So here you have to pay attention to that you do not have to divide this as 3 in the ratio of 3:2, as in the question it is specifically mentioned that these shares were equally taken up by P and Q. So there is no need of segregating them into the agreed ratio. So the agreed ratio that we have is mostly and majorly used only for the calculation and segregation of the profit between the co-venturers. Otherwise, we need to specifically look into that whatever is being taken over in what ratio, or has it been equally so that would be specifically mentioned in the question. So careful reading of the question before solving the solution is very, very important. So now we have taken this over, and then we have the sale proceeds also of the shares that we will be accounting in the joint bank account. So to joint venture account and sale proceeds of shares. So this would be the 60% and 20% that have been sold to the outsiders. This will amount to 9063. So the ones that have been taken over by P and Q would be included in their personal accounts, that is the capital accounts that we will be drafting. And now again, we are only left with the balances. So for that, we will first draft the capital accounts of P and Q. And as it was said that P and Q, we can draft the multi-columnar form of this particular account in order to simultaneously record the transaction of the co-venturers. So here it would be a debit, then a credit. So what is a multi-columnar form? We have the particulars here. Then we will have P's column and Q's column. Again, for the credit side, we have the particulars. Then we have the P column and the Q column. So if there are more than two co-venturers, then alongside in this particular account, alongside P and Q, the other co-venturers will also be added. So now this becomes their capital account. And first and foremost, the cost of shares that have been borne by P and Q. So by joint bank account. So 5,000 shares worth rupees 5,000 taken up. Likewise in Q also 5,000 shares worth rupees 5,000 were taken up. And then we have the profit that we can simply put down here by joint venture account. Profit on joint venture will amount to 788 in the case of P and 525 in the case of Q. And here again, since out of the sale proceeds that were sold to the brokers, 60% and 20% were taken over, and the remaining 20% was taken over by P and Q, again at rupees 9, and which is further divided into between P and Q equally. So here again, two joint venture account shares taken 1125 and the remaining here, so this is total 5788 and 5525. So the remaining amount would thus be transferred to the joint bank account. So to joint bank account final payment, that is amounting to 5788 minus 1125, which gives us 4663. And here 5525 minus 1125, which gives us 4400. Thus giving the total as 5525 5788. All right. So this was again an easy question here. It was only involved, and the workings involved were only related to the shares that have been. So because the project or the activity for which the joint venture was formed was related to underwriting of the shares only. So thus the amount, so the 24,000 that was sold initially only by P and Q. So there was no involvement of the proceeds of such shares, as they have already been given and sold to the public, to the outside public. So the only thing that we have accounted for here is the amount of the shares that have been taken over by P and Q, and then how they further segregated them between P and Q. So there was not much involvement in the questions also. So how such sale proceeds have further been sold by the brokers, and then out of that also how much amount was segregated between P and Q, and how many shares were procured by P and Q. That is what we have accounted for here, and accordingly ascertain the profit for P and Q here. Then we moved down to the joint bank account, and we had recorded here the cost of the shares, and then how it was transferred to the capital accounts of the co-venturers. Further, how the sale proceeds were recorded in the joint bank account. And now, since we are left with no other entry but to transfer the capital accounts here. So by P's capital account, by Q's capital account, so we only have to transfer their balances, and thus what will ensure that the question we have recorded each and every transaction correctly would be that if the joint bank account tallies, then we have recorded everything correctly. So now this amounts to, the total amounts to 19063, and in P's account and Q's account the balance that was coming was 4663 and 4400. So for P it is 4663 and for Q it is 4400. 4663, 4400. So the total is 4663 and then 10,000. So thus it tallies with the total of the debit side, and thus we have recorded and accounted all the transactions related to the joint venture in all the three accounts. Alright, so this completes our part where part of the illustrations which were concerned by which were related to the topic where where separate books of accounts are maintained, and such accounts would be, so there are three accounts when separate books of accounts are maintained in a joint venture. One is the joint venture account, the other one is the joint bank account, and then the personal account of the co-venturers. So accordingly we have closed the accounts, and one important point is that once you record joint venture, ascertain the profit and loss. Such profit and loss will be transferred to the personal accounts of the co-venturers. In the joint bank account, you will account for the selling and the purchase cost of a particular assignment, of a particular project. Then if there are any expenses that you need to account for, and further you will also be putting the payment due or payment that needs to be, if there is some payment that needs to be done by the co-venturers or otherwise, that would be also recorded in the joint bank account. And eventually once you record all such transactions in all the three accounts, then you will find out that joint bank account, after posting of all the entries, joint bank account should tally, and in case it doesn't, then definitely there is something missing in the which you have forgotten to include or account for in your accounts, but it is specifically mentioned and is there in the question. All right. So now we will be carrying on with the other questions which will be related to where no separate book of accounts are maintained, and how we prepare memorandum joint venture account, or how we prepare the co-venturers account in the books of, so basically how we prepare the other co-venturers accounts in the books of co-venturers which are simultaneously or which are having a particular joint venture together. So I'll be ending the lecture here, and in a fresh lecture we would be starting off with the next question. So see you in the next lecture. Take care and bye-bye.